It's your boy Wallstreet Ray tapping in for another weekly Outlook call, right? This is a call that I do to make sure you guys are properly set up, ready to go for the week, right? If you know what to expect, you much have a much higher likelihood of being successful. If you stay ready, you ain't gotta get ready, right? So with that being said, we're gonna go ahead and dive straight into it. We ain't gonna waste no more time. But right as we get this call started, do me a quick favor for your boy. Go into the chats that you got this link and type of OTC. All right. Say you on the call so that way all your family members, your team members, your group chat members, we all get locked in. So that way we are all in alignment for what it is that we're looking for this week. All right. So with that being said, let's go ahead and get to it. All right. First things first. I start these calls off with a few minutes of just a little bit of mindset, right? Me just being somebody that's been in the industry for as long as I have, I like to, kick these calls off with a little bit of, energy, a little bit of gratitude, a little bit of mindset, just to pretty much show you guys again that, if you're in the right mental state, that's going to help you, in your development of trading a whole lot better, right? And sometimes I see a lot of people going through the motions of trying to learn how to trade, but you coming from a place of struggle. You coming from a place of, worry, a place of doubt. You're kind of insecure about your own abilities. And one thing I could tell you guys is one thing a very underrated component of trading is confidence, right? You gotta have self-confidence to make money in these markets because you got to make a decision, live with the outcome of it, and know that it's going to work out in your favor over time. I feel like this is one of the most, mentally tough things that you're going to have to do in terms of becoming a successful trader. So let's just start there. You know what I mean? When you wake up in the morning, look in the mirror and tell yourself that you got this. You can overcome whatever it is that you're going through and you can master these markets, right? If you don't know, you chose one of the hardest industries in the world to become successful in, right? So with that being said, you gotta dig deep. This industry gonna test every emotion that you have. You're gonna have days where you doubt yourself. You're gonna have days you want to throw in the towel, days you want to quit. And I'm just here to tell you that if you keep pushing, you're gonna get through to the other side. My boy Devin ain't on a call, but Devin, I'll probably say he's one of my top, mentees at this point. I remember talking him off the cliff so many times, like too many times to even explain. Like every other week, it was like, bro, I'm done with this shit. I can't do this shit. I'm stressed out, just, really frustrated by the lack of production and the lack of results that he was seeing. And it's just something snapped just like that. Every week he's pulling like 5K out the markets now. And it's just crazy to see because sometimes you guys will be struggling for years and you have that aha moment and you make up for all the lost time. You make up for all the lost money, all the money you blew in the markets, all the money you spent on funded challenges, all the money you lost. Like it literally comes back like that once you had that aha moment. But guess what? You'll never have that moment if you give up. You never had that moment if you keep, thinking there's a shortcut, keep doing this thing half-assed. Some of y'all right now, you probably got something on in the background, you on your phone, you doing this and that. But one thing I could tell you from somebody that's created a lot of successful traders is the people that have the most results are the ones that's really locked in, the ones that got pen and paper, the ones that, watch the recordings, the ones that go above and beyond, because this is an industry where you're gonna get out what you put in every single time. You can't use your good looks. You can't use your charm. You can't use your Instagram following. You can't use none of that in the markets. It's just you against you, right? Or you against the markets. So with that being said, like make this your best week, right? Pick one thing that you want to work on, one thing you want to focus on, and really, implement that day by day and take it one day at a time, right? If you can go to bed at night knowing you did everything right, that's how you start stringing together wins. And if you have a good day, you can lead that to a good week. Good weeks lead to good months, and good months lead to good years. Good years lead to a great life. All right. So, with that being said, let's go ahead and get into it. All right. Appreciate y'all once again for tapping into the call. Again, if y'all unfamiliar with me, I know some of you guys, this might be your first time on here. My name is Ray. The people call me Wall Street. All right, go ahead and give me a follow on IG if you haven't already. I drop a lot of content, trading gems and stuff like that. And I'll be dropping a whole lot more moving forward this week. I got a lot of fire, packaged up for you guys. All right. But let's start off with Nas 100. All right. What is going on with Nas 100. Now, as I explained to you guys last week, Nas is going to be bullish 80% of the time, right? If you look back over over years, over history, the market is always bullish on Nas because it's an index of all the top performing companies, right? And the stock market is going to go up simply due to inflation, simply due to the value of money declining, right? Like for example, their profit over the course of their companies, and their annual returns or quarterly returns, all that stuff is always going to increase just due to the fact that the dollar is dying, right? And like this is a whole nother topic, but one thing you got to realize about indexes in general is regardless of what the company is doing, regardless of how they're performing, if a company starts declining, they're going to replace it with a positive one. So the markets is always going to be bullish on the stock market side of things. So when I see the market decline and have a decent drop off like it did here, what I'm essentially doing at this point is looking for a reason to take the market back up to grab new highs, right? Every single time you can look at the markets on the monthly time frame, right? And let's go back some years, right? If we go back years and years and years, you can see that the market is always bullish, right? We can go back all the way to 2014. The market just continues this upward trend and this upward trajectory. And that's the reason why, okay? Not only because it's an index of the top companies, but also as the dollar loses value, these companies are actually earning more money on paper, right? It doesn't necessarily mean they're all performing great. It just means on paper they're worth more, right? Just due to the fact that the dollar is declining. So, us understanding that, what is it that we expect to happen? Obviously some bullishness. Now, just simply put, we buy low, sell high. If this is the low and this is the high, I don't really want to buy up here, right? I don't want to buy towards the top of a trading range. So I want to look for a reason for the market to actually decline, right? I want to look for a reason for the market to go, in the opposite direction, and then find an opportunity to take the market higher. Now, one thing that we can point out just off the rip is this gap, right? The market opened up higher with, news that we might have a trade deal with China. So just with that, the market did increase a little bit over the weekend, right? So first things first, I do expect the market to come down. All right, so at least fill in this area. From here, it could continue up, or even better, in my opinion, even better, we actually drop a little bit more because as you can see, there is another fairly large gap way down here. Now, I'm gonna be honest, these gaps don't always have to fill. Sometimes they don't, right? And so I don't base my whole analysis off of gaps being filled because if you do that, you're gonna miss a lot of opportunities. But I'm just creating a framework for what I believe can happen, right? We had a good sell-off here. All right, good sell-off. I know a lot of people are looking at this for a potential buy. All right. But at the same time, if we look to the left over here, we have a lot of weak lows to the left still. Now, when I'm looking for a buy opportunity, I like to make sure all of the weak lows to the left have already been cleared out. Because if I start buying here too early, what's going to happen is we're going to engineer liquidity. All right. Liquidity is going to be pulled underneath these lows, and then that's going to attract the market to go lower and possibly fill in this gap. So if it's up to me, all right, if it's up to me, I would say this market is going to drop lower, all right? I'm going to keep my eyes on this area just in case the market wants to provide a buy from that area. But at the same time, I'm looking at more of this region for a potential sale. Now, Wall Street, why are we looking at this area? I'm glad you asked. If you guys know my technique, right, it's called a hezzy crossover, right? This is one of my entry models. And, I'd say I created this based off of a very simple premise, right? When the market is impulsing into a direction, you want to see hesitation then a crossover in one direction or another. Now, this hesitation is important because what it does is it left this high, and wherever the market leaves a high, there's retail people or retail traders taking sales from this area. Okay. Now, if I understand that there are retail traders taking sales from this level, that means that there is a large pool of money resting right above that level. Now, why is this important? It's important because 90% of traders fail. Okay. So if most traders see a lower high and they start taking trades right here, okay, that means that most of them are going to lose their position before the market really chooses a direction. All right. So I look at this as a low that we're going to target. All right. So we're going to target this low and we're going to sell from this area here. That's what I plan on doing. All right. Now, obviously, some people might ask, okay, well, why not take the buy, right? I mean, the buy looks healthy as well, right? If you're going to take the sell, why not just live with the buy? And again, it just goes back to the Hezi crossover principles. I don't see a solid Hezi crossover right here, right? Where the market chooses to hesitate way up here, but that's long after we've had our crossover phase, right? I want to see the Hezi first and then the impulse in one direction or another. All right. So I look at this as a false push to the upside. All right. And I look at this as a potential target for more sales. So when the market comes up here, a lot of people are going to start selling right away. A lot of people may start selling from here. I believe that that will be a trap. Okay. So I'm going to wait until the market goes a little higher. Then I'm going to sell down to this region here. All right. Once we get down to this region, I'm going to look for the market to start accumulating a little bit. We get a couple reactions, right? That's what we like to see. We want to see the market bounce a few times because if the market starts bouncing, that means people are going to start buying, right? People are going to start buying real early. And then if that happens, we wait for the manipulation candle and then we'll continue back to the upside. It's very similar to what happened right here. If we just take a look at the previous sale, we can see the exact same pattern playing out. All right. So what happens is the market will start rejecting multiple times, right? Now, every time the market rejects up here, more and more people are starting to take sales, right? Because they think the market's going to drop. So if a bunch of retail traders start taking sales and they put their stop loss right here, what happens is there's a large amount of virtual digital money that comes into the market right here in the form of stop losses. Trading is a zero-sum game. So there has to be a lot of losers for a very few amount of people to win. So what happens is 90% of traders start selling early and they put their stop loss here. Okay. So when the market manipulates that move, is going to push up, hit their stop loss. Once the stop loss is hit, now it becomes available for the smart traders, right, to add that money that was just lost. They can now add it to their winning position right here and then drop the market. Hope that makes sense. This is why you wait for the manipulation phase in order to have a higher probability trade setup. So the same way we see the market have this slow curve, like build up, consolidation, thrust up, and then push down, is the same thing I'm expecting to have once we get down here. And it's also another reason why I'm expecting the market to keep selling because we haven't had the market start to just slow down and consolidate yet and then manipulate. So there's no real reason for me to start looking for long-term buys. This market is clearly, in my opinion, still still bearish, right? Still bearish. Once we actually clear out a significant level, a significant low, like this low here, and then we start creating this slow, choppy price action like this, just on the opposite side, that's where I'll start to personally, look for some long opportunities. But as you can see, again, that sale looks good. we come down into this area, this gap down here, I believe that'll be a perfect area to start anticipating some buys. So I would look at like 25.5, right? 25,500. Obviously, you can give or take a few points in either direction, but just to give you a round area or like a vicinity that you should be looking, definitely take a look at 25.5. All right. So 25.5 is where I would look for some buys, and anywhere above 2680, 26,080, right? And obviously check your broker, right? Because some brokers have different price points. But if you had to mark up your chart on the 15-minute, I would like to, start entertaining sales above this high right here. So again, if you have to pull it up on your own chart, maybe it's different. Like I know if you guys are trading like NQ on a funded challenge or something, like it might be different, right? So just be mindful of that. But just look at the setup, mark it up on your own. That way you can, follow along with the setup precisely, right? So yeah, that's what I see taking place. Realistically, it'll probably pull up to around 26, 120, somewhere up here. But I'm definitely going to like be on my toes once the market is up here, right? If it pulls up higher, that's even better because now my stop loss could be that much smaller, right? So whether it sells from here, whether it sells from up here, it doesn't really truly matter. But just the higher it goes, the smaller my stop can be, right? Because now I can put my stop right here. If it's down here, now I got to put my stop a little bit bigger, right? So just be mindful of that, guys. And again, this is a predetermined setup, right? So I'm giving you the setup like early. Now, if I'm trading live, my stop loss is always going to be super small, right? So the difference between me taking a 1 to 3 type of trade, 1 to 4, 1 to 5, and a 1 to 10 or 1 to 15, the difference is me executing this live, right? But me just giving you the setup the day before, whenever, obviously your risk to reward might not be as good. It's still better than most, right? Most people can't, they're not even getting 1 to 5, 1 to 6. So it's still a great trade setup regardless. But if you understand how to enter in live market conditions, you can definitely maximize that risk to reward in your favor. All right. So that's that. Let's keep it pushing. Let's take a look. Let's take a look at GU. All right. Now, last week I did take a jab at GU right here. This just goes to show you that every setup that I choose ain't right. You know what I mean? I took a trade right here. It went like 20 pips in profit, then it reversed. But here's the thing. When I'm in profit, I'm moving my stop loss, right? Like I don't really waste time moving my stop loss. Some people are afraid to move their stop loss too early. I'd rather not lose nothing than lose, right? So period. Like even if I micromanage a position a little too much, that's cool, right? Like, and you also got to understand, like if you have the time freedom or the availability to be on your computer, like I can enter right here, and by the time the market is here, I can already move my stop loss, right? Now, if you work a job where you can't be on your phone or your computer, then you might not want to move your stop loss as aggressively as somebody like myself. So these are just little things to take into consideration. Like if you have freedom to kind of be on your phone, your computer, you could be very aggressive, right? Like you can take a trade right here. If it gets right here, move your stop loss to break even. You could attempt to take this trade. Once it gets here, move your stop loss to break even. So that's why I'll take several jabs, right, at the markets. And even if the market don't play out all the way like I want it to, I can always either protect myself or even make a little money, right? I don't know if you guys remember last week, I gave you guys this setup here. You could probably see it on the weekly outlook. I believe it's uploaded on my YouTube. It should be. But I told y'all this high get cleared, it will probably, push down the main new low. Now, I did think the market would come here and go bullish. That's why I took that trade. went into profit a little bit. I think I secured a little bit of profit there, but then market just started continuing to go bearish. Now, what are we expecting for the market to do now? All right, now that it's continuing to drop. Now we've actually hit this external range liquidity, right? So we came and took out this major low. This low was created, a few months ago at this point, right? August, September, October, November, like, yeah. So, I mean, this low was about 2 months old, right? So now that we came and cleared that low out, you got to assume that there's a lot of money under there. I would say if we're going to go bullish from anywhere, right? It'll probably be down here, right? So let's see if we see some sort of an accumulation taking place. All right. So you got a reaction here. You push a tad bit lower, and we come and sweep that low here, right? Market is pushing up a little bit. I want to see a little more aggressiveness in this push. I'm not fully sold on it just yet. I do feel like we may come down for one more low, right? One more low. So if we can come and grab this low right here, I'd be more than happy to take a buy on that, right? So I would be looking to take a buy underneath this low right here, all right? Just because I'm not convinced in this push up, right? I need to see if the market, and here's the thing I gotta realize, like if I like the area overall, but I don't like the low, then I'm looking for an ace entry, okay? And an ace entry for me is when the market creates a low, then I wait for that low to get taken again, and then I enter as the market is pushing down into that low, right? So it's almost like an anticipation trade, right? I'm not really waiting for the market to go bullish. I'm just anticipating that it will based off of, okay, we reacted here, we reacted here, we reacted here. Eventually this market is gonna reverse. Like this is like a big ass accumulation in my opinion, especially considering that the red line is a previous month's low, right? So this red line is a very significant area of liquidity, all right? So the fact that the market is pushing down, pushing back above, pushing down, pushing above, pushing down, trying to fight above, I believe that overall, this area down here will cause a reaction. Now, how do I know whether or not the market is going to make a higher low and keep going, or if it's going to go make one more low one more time? I understand that just by analyzing the reaction, right? So if I don't like the reaction, I'll look for an ace entry like this. Now, if I like the reaction, right, let's say the reaction looks good, then I'll look for a higher low point, right? That's above that low down here. But this area right here has to be attractive. Like I have to see aggressive candles. I have to see some form of displacement. Displacement meaning like the market's trying to get up out of there. Like the market is clearly, extending itself to the upside. And if I see that, then I'll feel comfortable taking that higher low entry, right? But if I look at this area and the candles look kind of weak, it's like where would I even take a trade at, truth be told, right? Like where would I even mark up my zone? Right? I could see how some people may say maybe you could take a trade from here, but if I have questions, I'm going for an ace entry. I don't even want to question it, right? That don't really look like a low that's, in my opinion, that'll cause a major, major reversal, right? And when you see just how slowly the market is pushing its way up, look at how slow and choppy the market is pushing its way up, right? If this was really a higher low that we should be, considering, then the market is going to push up aggressively. You know what I mean? So those are the little telltale signs that you start to understand as you put in a lot of time. So yeah, exactly, bro. Uh like Wisdom with Wheezy said in the chat box, he said that's a trap. Exactly. That's a smart money trap, right? So What is a smart money trap? It's like when you see the same setup that everybody else sees and you realize that everybody else sucks at trading, you can mark it up as a trap, right? That's the best thing to do, in my opinion. So, get tight. Like, once again, give your boy a follow if you haven't already. Show me some love, man. I'm trying to pop back out on the gram, you know what I mean? But anyway, if everybody sees it, I ain't taking it. Right? This is a trap. A lot of people are going to take trades from here. Once they get wrecked, that's when we get in, right? So I'm going to wait for this right here, and then I'm going to take my buys. All right. So 1.309, I like that. 1.309, I'm loading up my buys for that, right? And if it happened during New York, that's even better, right? Could happen during London, but for me, if it happened during New York, that's even better, all right? All righty. It's another one right here. If y'all remember last week, told y'all this was a trap here also, right? When we did the weekly outlook, I told y'all, look for this, right? There's money underneath this low. So now the market's finally pushed its way back down. Now we should be anticipating accumulation taking place right here, right? Look for the market to rank, consolidate a little bit, push down aggressively. And as it's pushing down, that's when you want to get in. And look, I know it's scary, because it's like if the market is dropping hard as hell, most people don't want to buy, right? But just think with me for a second, okay? If you wait for a reaction, you're already too late. How do you get a perfect entry? You wait until the market looks scary as hell. That's when you take the trade. I'll give you guys a prime example. Let's look at this buy right here. All right. Y'all all see this long wick. It's a blue candle, meaning it's a bullish candle. But y'all all see this real long wick where the market's pushing down. That means at one point this was a big bearish candle, right? That means this candle was once black. It was selling super aggressively. But guess what? If you wait for the candle to turn blue, now you entered right here when you could have entered down here, right? So the psychology trick is to take the trade when it looks scariest. You're not supposed to wait until it looks perfect. If it looks good, you're already too late, right? This is where a lot of people miss it, right? They don't understand this simple concept. So again, this candle that is now blue, it was once big and black. It was selling super hard. A lot of people probably was like, "Oh, I'm not touching that. It's dropping, it's going to hell," right? That's when you want to buy it. If you wait for it to turn blue, you're already too late. And something like that is the difference between your risk being 10 pips to catch 70 pips, that's a 1 to 7, or now you missed it. Now you get entering up here and now you're trying to figure out where should you put your stop loss and all of that. So that's how you get the good risk to reward trade setups. All right. I've caught 1 to 20s, 1 to 30s, all of that. And I've always been able to do it by taking the scary trades. I don't like by the time it looks perfect, like I said, you're already too late. You're late to the party by the time it all looks good. You know what I'm saying? So that's that. The market is reaching that area. That was the trap here. Another trap here. Now it's pushing down. I would look at 1.15. Easy round number to remember. 1.15, or if you want to be aggressive a little bit, 1.151. Right. But I do think we'll hit 1.5 solid, that round psychological number. I do think we'll hit that. Right. So 1.15 on Euro USD. I think that'll be a good buy for you guys. All right. 1.15 on Euro USD. I think that'll be a good buy. All right, let's go ahead and take a look at this, right? Shout out to Gold too, man. Gold paid me well. I actually closed the trade too early. I could have made a lot more, but this was what, Thursday? Real quick, I got right.
Hey man, say
Hit that
man.
nice little
You
gold
already know
for
what's going on. You already know what's going on.
nice little
You
20.
already know what's going on,
You know?
man. 15-minute day.
So boom, just 1 minute execution, 17 minute. I recommend the 1 minute chart all day, right? If you guys trade on a 1 minute, a lot of people think it's a lot of noise on a 1 minute, but I'm like, yo, y'all gotta realize, bro. The same thing happened on a higher time frame happened on the lower. It's all the same. It's fractal. So if you could understand the price action, then you'll be all right. Period. Right, but I definitely should have kept holding this bad boy. I could have made a whole lot more. I could have made like probably five that day. But it's all good. Right, it's all good. 17 minutes and I made just under $2,400, which was a blessing. Grateful. But saw the trend line liquidity building, saw the strong low building. 1 minute hezzy crossover, took the buy to knock out weak highs, right? So what is it that we see right now? All right. Okay, interesting price action here. We haven't really cleared out any significant low, if I'm being completely honest. We have cleared out a low right here. I do want to, at the very least, be mindful of that. But now the question becomes, is this a low that is going to cause the market to go a whole lot higher, right? That's the question we got to ask ourselves now. So as I just analyzed, um, low, lower high. I don't see no hezzy, right? I don't. So me personally, even though it looks good, it's pushing up right now. I'm not going to fall. I'm not falling for the bait. I think we'll get one more push down. All right. I think we'll get one more push down. Possibly for this here. Possibly for this low here, or even lower, to be quite honest. I wouldn't be surprised if we hit, 38.80, 38.80. So if I had to just compare each side, right? We haven't really cleared anything on the low side, right? Yeah, we did just break this low, but I'm gonna be honest, that's not really significant to me, especially when I look to the left. But if I just take a look at the highs, right? Now the highs do look a little different. We created a high here, we knocked it out, then we pushed down, made a low. We created a internal structural high right there, came back into supply, made a new low, pushed up here, created an internal structural high right here. Now, what I could see happening is the market coming here before it drops again. I could see that all day. I could see that all day because I don't trust this low to be a major reversal. And this is like the big indicator for me. If I look at a low and I don't think it'll cause a major reversal, that means the market has to target that low again. So my job now, if I look at this low and I say, I don't really trust these lows to send the market way up here, then the only other alternative is for the market to go lower. And so now I'm looking for reasons. I'm looking for signs and indications of when and where the market could go low. So when I see a strong high right here, and I see a supply zone being respected right here, then I see the market push down, hezzy, crossover bearish, crossover break of structure bearish, internal liquidity high. Once we take out that internal liquidity, we'll make a lower high right here, and then we could target more weak lows. Okay. That's how I look at this thing, right? So I'm looking at one more good sell off on gold. Again, it's pushing up now, looks good, but where's the hezzy, right? Where's the hezzy? When I see the market just pushing up, I look at those areas to just get, destroyed, to be truthful. Like truthfully, I look at those areas to get broken and cause a reversal. All right. So I'm looking at, you know, maybe like 4,000, 15. This ballpark, you got to execute wherever you feel like. But overall, that's the point of interest, right? So, you could time it. Some people just take the bottom of this candle, enter there. Some people just eyeball it. It's kind of up to you how you want to execute. But overall, I'm looking at that area to give me one more push down. I like this. I like that. Clean the chart up a little bit for y'all. Again, strong high here. That high is higher than this one. We do hesitate off of previous demand right here. Demand is any low that makes a new high. So since this low made this high right here, right? And when the market interacts with this region on the way down, that is the hezzy, right? So I got my hezzy crossover bearish. We break structure bearish. Now that means that this is just bullshit right here. This high right here is just here to distract you, right? That's just noise, right? We coming back up to this high right here, right? Once we hit that, I could definitely see us melting from there, all right? At least to this area. But if we get lucky, we could target a little bit lower, right? I would target at least to here, right? You can partial out at the low right here. Even this one, like I say, we get lucky. Not even lucky. If the market just want to come and clear out all these lows, like I think it can, we could target further down, like down here, for a 1 to 15. All right. All right. So I like that. I like that. I like that. They ain't ready for that one. That might hit tonight too while you playing. That might hit tonight while you playing. What we got with crypto, man? More BS, huh? No matter what it does, I think this region gonna hold, right? I remember last weekend we talked about this region. This region should hold. We have our strong low hezzy crossover. This is our zone right here. That low should hold, right? We just gotta see. All right. That low should hold. Market gonna take its time. Maybe it comes down, pushes into it again. If so, just keep stacking orders, right? Like I'm not like a day trader on crypto. I hold crypto long term. You know what I'm saying? I hold crypto long term. These are any of the ISO coins, you good. So Ripple, you know what I'm saying? XRP, Solana. That's not a ISO, but Solana is still a good thing to have. Um, yeah, you know, just keep buying crypto. Get your cash flow right, withdraw from the markets, keep a handful of your profits in crypto, you'll be all right. All right. So quick recap. Like I said, I wasn't gonna be long, but I'll be strong. We already pushing 40. So I'm about to get up out of here. We selling Nas when we get up here. All right. I'm looking for sales on Nas. Obviously, timing is important. So make sure you're trading this in the appropriate window. If this happens at a random time, I'm not taking it. If this happens well before London, I'm not taking it. If this doesn't happen during New York, I'm not taking it, right? So, your zone, your point of POI selection, point of interest selection, and conglomerate with time of day is how I pick these setups, all right? So I'm looking for these that happen in the appropriate window. Looking for, again, EU to buy around 1.151 or 1.150. All right. Expect the bounce here. Expect the market to bounce. Expect it. Okay. Because the more it bounces, the more money gets generated underneath it. Because people that are trading early, people that have no concept of liquidity, they only look for bounces, they only look for rejections. So they're going to mark this up as an area of supply, or not even supply. They're going to mark it up as an area of support, right? That's not even a term I use these days. If you've been trading long enough, honestly, support and resistance shouldn't even be in your vocabulary no more. Those are like remedial, you know, retail terms. You know what I'm saying? Once you graduate past that, you start understanding liquidity. You start understanding what really moves the market, not this imaginary line, but liquidity. Where's the money? So again, most people are going to see the market reject multiple times. They're going to start buying. The more they buy, the more money is put into this area, which is the reason why we'll more than likely come down, hit 1.15, and then take off. This is the first phase of the market. This is consolidation. Let's wait for the manipulation phase, and then we'll get that continuation phase right there. All right. Same thing with GU, guys. EU and GU, they move pretty similar, so there shouldn't be much confusion on that. Okay. This is a trap, in my humble opinion. When people start buying here, what is that going to do? That's going to put more money underneath these lows. Once the trap gets liquidated and everybody's scratching their head, wondering why they lost, that's when we get in. We get in after the losers lose first. Okay. So once the losers lose their money, then we'll get in for the buy. And I know that happens to people all the time. It's like you take a trade, you lose, and then the market wants to go your direction. Type a $sign in the chat if that's ever happened to you. You take a trade, you lose, and then the market wants to do what you thought it was going to do. That's because you were the liquidity, right? You were the liquidity, all right? So, do you review GJ on these calls? Not sure what pairs you normally look at. I can look at GJ if you'd like. I don't really trade GJ, but if you'd like, I don't mind looking at it. All right, but and also gold. Again, I feel like we got one more good low to make before we continue our run. All right, so I'm looking for gold to push up, clear out this intermediate high, this internal structural high, and then let's make one more push to the downside. All right. I'll be honest, I'm not a huge fan of GJ. It hasn't been moving all that pretty in my opinion, but I know a lot of people like it. So, we can take a look at it. Um, I want to say, yeah, I gave y'all this one last week too. I gave y'all this one last week too. And this is and again, all this stuff is recorded. I'm not, making this shit up. Like you see, I just turned to this. I don't even trade GJ and I had it marked off. That's how I know one of y'all asked me for it. Because there's no other reason for me to have GJ marked up. But again, this is what happened. Consolidation right underneath the entry point. Then the market manipulates, takes those highs, takes out the early sellers. Everybody that started selling right here and right here, they get taken out the trade. And then the market moves in the direction that we all wanted it to go. So now that we came and cleared this low, what's going to happen, right? Most people would say, well, we cleared our lows. Markets should just reverse to the upside, right? Yeah, but it's never that simple, huh? It's rarely that simple. We'll go probably come down, grab this low one more time. Let's hit the 200 psychological number. All right. 200 also lines up with this gap very nicely for some reason, right? 200 psychological level. We'll play around here. We'll accumulate around 200, fill in this gap. And then from there, we probably continue bullish, right? Probably. Like I said, I'm not the biggest fan of GJ, but if I had to put my money on it, that's what I would say, right? Um, we drop down one more time, fill in this gap, then we push back up and attack these highs, all right? Attack those highs. So that's what I would look for. One more drop. All right, one more drop. Let's see if we can find the setup exactly. Previous level of demand, market hesitates, crosses over. That's my Hezi crossover. We came, we cleared the Hezi. So that makes this a strong high. This high is higher than previous highs and is also respecting previous supply zone here. All right. And that supply zone came from another strong high. So you see a high clearing previous highs, pushes down, respects that, Hezi crossover, pushes back, respects. So now you see what we have, what we call a supply chain, right? It's like supply linking together, like a stair step pattern, right? That's a supply chain, right? So now, what do we see happening here? I see this high, not the prettiest, but it ain't the prettiest. I ain't gonna lie. I'm not a big fan of this high. Um, Not a big fan of it. But I would say if I had to take a setup on GJ, it'd probably be the sales up here. Even though I'm not a big fan of this high, I'm trying not to be too biased, right? Sometimes you can compromise a little bit on how good something looks if you think it's short term, right? The fact that I believe the market will come here and then return back bullish, this high doesn't have to be perfect, okay? It doesn't have to be perfect because it only needs to be good enough to get me here, right? Like it's not like it's gonna be a long-term high. Like it's only gonna be there for like a day, and then the market should reverse. So if it's gonna be there for a short period of time, it doesn't have to be picture perfect. You know what I mean? So considering that, I'm willing to compromise just a little bit, willing to negotiate a little bit with this high. I'm willing to believe that we can take that high, sell from it, attack this low as a trap, because I believe that's a trap. Everybody's looking at that imbalance with Google eyes. They're going to lose. And once they lose, we hit 200. Once we hit 200, we fill in that gap, we accumulate, and then we take off. That's what I see happening. All right. All right. Good questions, though, man. Good questions. Good questions, family. I did enjoy this. I did enjoy this. Like I said, I wasn't gonna be long today. All right, wasn't gonna be long today. But any other comments, questions, or concerns? I feel like we had a good, solid opening call for the week. I'm excited to see what happens in these markets. Obviously, this is all speculation to a degree, but I feel like I have been trading long enough to kind of, put the odds in my favor a little bit, right? You're never gonna win every single trade, right? Everybody has different strategies, and all the strategy is a perspective. Some people use indicators, some people use, you know, trend lines and all types of crap. Some people use all different types of stuff to, make sense of these patterns and these charts and these lines and these zigzags, right? And if you can make it speak a language to you that you understand, that's all that matters. And it's not about being right, it's about being profitable. I said it last week. I'll say it again. Somebody might have a higher win rate than me, but I still make more money. So who's right? Are you in this to have a great win rate, or are you in this to make money? I can close every time I take a trade, I can close it at $10. And then when I lose $300. Imagine if I take 10 wins at $10 and then I take one loss at $200. Now I'm negative for the week, right? But my win rate is 90%. Let's say I take 9 wins at $10 and I take one loss at $100. My win rate is 90%, but I'm not profitable. That's how some of y'all trade, because some of y'all are so excited to see profit. You close the trade the moment you go blue. You close the trade the moment you in profit because you're so afraid to take a loss, right? Me, on the other hand, I could take 10 trades, lose 6 of them, but the 4 I win are going to have risk to reward like this, right? Where I make 9 times what I risk because I'm not afraid to let a runner run. You know what I'm saying? I'm not afraid to let a winner go to its target. So who's right and who's wrong? I would say the person that's right is the person that walks away with more money, right? So change your perspective on these charts. You should have a strategy to make profit, not to not lose, right? Like straight up, don't let that go over your head. You have a strategy to make money, not to avoid losses. There's a difference. I can take losses, but at the end of the week, if I'm up, that means my strategy works. Some of y'all think a strategy don't work just because you took 2 losses in a row. That's not how the markets work. It's not how the markets work, y'all. This is why a lot of people fail, because the markets go against conventional wisdom. If something in real life is not working for you, you look to change it, right? In trading, your strategy doesn't have to work today. It can work tomorrow, though. It doesn't have to work the day after that or the day after that. But if it can work weekly, or if it can work monthly, bi-weekly, however you want to check your progress, if it works, it works. But it may not work every single day. And that's the mental leap you have to overcome. When you realize time don't exist, time is an illusion. Your expectation for profit doesn't mean shit to the markets. Once you understand that, you'll be all right. Just because you think you got to make money today, that don't mean the markets think that way. That don't mean that's what your strategy says. It's human expectation. It's human greed. Those are the things that ruin us in the markets, right? Give yourself time to be profitable. If you look at the markets day by day for profitability, one day you'll be a good trader. The next day you'll be questioning whether or not you ask. Like that's how it works, day by day. But if I give myself a week or two to test the strategy over the course of time, then you're like, oh wow, I am a good trader. I made 15% this month. But most people can't make 15% in a year. You beat the S&P in 1 month because you gave yourself time. That's a whole nother lecture though. I'm not here to be here all night, man. I want y'all to be able to rewatch this pretty quickly. So, with that being said, any other comments, questions, or concerns? Hope you guys got some value, man. Type some 777s in the chat if you feel like this was somewhat valuable to you. If you enjoyed what you saw, do me a favor, give your boy a follow, man. I'm trying to get my followers up, bro. I'm at like 13K right now. I'm trying to get my shit right. You know what I mean? But look, I appreciate y'all, man. I'll see you guys at the top in front of the top, because the bottom's way too crowded. Much love. See you guys on the next one. Trade Genius. I'll see you guys Tuesday morning. All right. All other chats, I'll see y'all next week. All right. Peace.